Hey guys, Saya, it's Les Gallagher here. I'm one of the traders in the Ninja Forex Traders Group, and I tend to use the harmonic scanner. As you know, I'm on live Monday to Thursday using the harmonic scanner with the BYOB strategy. I called a trade on Wednesday evening. Wednesday evening. I called a trade on a currency pair USDJPY using the BYOB strategy as an entry. The trade went against us. I'm still in that trade. I'm in drawdown, and I've been for the last all day yesterday and part of this morning. And I was talking about it on yesterday's session, which was Thursday's, to give an explanation, because I went back and analysed it, because I'm one of these people who think, well, why is that going into drawdown if everything matches up and lines up on the strategy? Why has that gone against us? Because I just want to learn for later. You know, if it ever happens again, at least I can maybe look at other few indicators, or maybe use the experience from this. So basically, I was discussing last night the price movement on this particular pair. And I'm going to share my screen with you just so you can see what I've been looking at. Okay, so this is, hold on, I just want to check I've got the right one. So I've got the right screen up here. Screen 2. Yeah, that's it. Screen 2. Yeah, I've got that. Okay, so here we are, screen 2. And what I want to, I just want to point out to you on this, when I've gone back and analysed this, and we can see what's happening here. We've got some news coming up in just over 10 minutes' time. Non-farm payroll date is today over in the US, and traditionally this is a news day. People tend to not get involved. They tend not to trade the news because anything can happen. It can go up and down, but up or down. But what I want to show you is something here. This is all to do with how the institutions trade and how institutions work, and how they can build up, you know, liquidity, how liquidity builds up and stuff like that. It's all relevant to what we are doing, but it's just something that maybe that you want to pay attention to in the future before you get involved in trades. Now here, we can see a movement on here Wednesday, actually, from when the market opened on Sunday night at 10 p.m. last Sunday. Wednesday, this particular time here, just after midnight, 12:30. Wednesday, it hit the low of the week. I've just marked that on there. This is the low of the week down here, and since then, you can see here, this is the institutional candles here, bankers candles, big drop, and then they've gone back up. This little red candle in the middle is significant as well, but we can, I'll talk about that at a later date. But as the price has gone up, and you can see here where it stalls, these are retracements, right? These are retracements in the markets, right? And the reason these retracements or pullbacks happen is it builds liquidity up, and the banks cause these because they want the market to go up, right? But it can't go up in a straight line, right? It can't go straight up. It must build liquidity. Now this is a 30-minute time frame, so these are happening over a period of time, and what they're doing is they're creating a sale here. And what the institutions are saying, look, we are selling, we want you to buy. So what they do is they give these indications that it's going to sell, that it's going to buy. And what happens is we enter the market as retail traders and we start buying. And they give these push-ups, yeah, these big green candles, push it up. I just want to zoom in there a bit now so we can see that. And what happens is we get these push-ups on these candles, and pools of liquidity build up, because as we buy, we are putting our stop losses in, which are basically sell orders, pending sell orders. So we've got stop losses sitting under here where we've entered the market, and everything's going great, it's going up, and then every now and then you'll get a little bit of a pullback and we'll take out some stop losses. But in the main, these pools of liquidity have built up. Right, now just to give you an idea, up till here, right, I'm going to take it from this last one, right, just to give you an idea. Now it is around about $10 million a pip, right, so we can measure from this low on Wednesday up to here, right, up to this point here, right, so there's 160 pips in that times 10 million, so that gives you an idea of what's on there. There's about $1.6 billion sitting in there. It's cost $1.6 billion, sorry, to move that price up to there. All right, so that's what's happening there, and we've got these pools of liquidity. Now, amongst these pools of liquidity, some of them we have marked. There is what's called imbalance. Not here. Just zoom that in a bit. But we do have imbalance. There's some imbalance in this candle here. This is where orders haven't been filled. That one's okay. There's a little bit of imbalance in this one. There's a little bit in that one. There's some in there. So what this means is at some point the market has to come down. It has to come down. Right now we have people saying it's going to go up, it's going to go down, it's going to go up, it's going to go down. I don't know what's going to happen. But all I'm doing is I'm using a thing called Wyckoff's laws here of distribution, where they've basically created a sale here. So and by that is the banks are saying, I'm selling, we want you to buy, and we've bought all the way up here. So anybody who got in here down here and have stayed in and gone all the way up here, you'll be thinking, I'm a freaking genius, yeah, I'm brilliant at this. All right, so you'll be up here, you'll be thinking, that's it, we're all going to be rich, I've got this sussed. All right, and of course as it's going up as well, we could be triple stacking trades and stuff like that. Yeah, I've got one trade, I'll put another one on, I'll put another one on, and I'll go up and I'll go up. We could be taking partial profits if you're sensible on the way. So anyway, this is where we've ended up. Now, from analysis, okay, from analysis, this was phase A here, where we've entered phase A on a Wyckoff distribution schematic here, what I think personally has happened. Phase A. So this PSY, all the PSY means it's preliminary supply, right? And when you see this pullback here now, and then it goes up, this is the buy-in climax that's happened. Preliminary supply, right? This is where larger interests, the banks, interbanks, and institutions and things like that, they start unloading their shares, right? So you can tell they've done it by that big wick down. Then it comes back up, and then we've got this other candle here, and then it goes back up again. And it gets up to this point here, which is called the buy-in climax, right? And this is where you can measure the volume on this, where you get increased volume just at this, where you get lots of heavy urgent buying, because lots of retailers tend to, retail traders tend to jump in at this point, because I think it's going to go up and up and up. All right, so that's what's basically been happening. But what's significant about that is once it reaches the buying climax, we do get an automatic reaction from that, and this is from these three candles here, where it's drop, drop, drop down. That's what the AR stands. That's the automatic reaction. Then it goes back up, and it's come back down, and this is called a show of weakness, right? And this is we're into phase B now, right? Then we've got this distribution phase where the market's gone up and down, up and down, up and down, and we've got a couple of tests here. These are called secondary tests, right? Where it's gone up to test the buying climax point to see if there's anything there. It's gone up again, and it's dropped straight back down. So it's testing this buying climax, which is basically a level of resistance. Now, what's happened is this morning we've had an upward thrust here, which starts to happen towards the end of the distribution phase, where the market is getting ready maybe to turn, right? So what's happening here? We've got this upward thrust, and then we've had this upward thrust again after the distribution phase, where it's gone through, it's broke through this previous one, and it's gone up and it's testing it now. It's testing it now. All right, now this purple line here, what you can see just on here, this is the high of the week, and it's just wicked through that on this last candle, right? So what it's doing is, what's happening now is it's sending a message out and it's saying continue to buy, because this is going to go up, and we can see there now it's just on that candle as it's happening there now. Just move that over, you can see there it's starting to go up now. So this is telling us, I mean, this is them telling us that this is going to be a buy, it's going to go up, we think it's going to go up. Now what you've got to remember is, I'm just going to nip up to the 4-hour chart, right? The reason I'm going up the 4-hour chart is you can see here where I've got the line for the high of the week, there is a couple more things up here, a couple of more wicks up here, right, where we've got some equal highs here. We've got 3 and we've got 4. So it's quite possible, right, that our price could go up past these to take out any liquidity, any remaining liquidity that is there, then it will drop. Okay, so it could well go up there, take out this liquidity, and then drop. All right. So the reason I'm making this video is just so we can watch and see what happens. All right. So I'm just going to move that up to there. There's the high of the week, and just move this along. Put that arrow on there now. Let's let that down a bit. We can see there. This is the high of the week, Friday high of the week. All right. So what we're going to do is just going to pay attention there. See, you've had that little up there, it's wicked and it's coming back down. So it may well just go back to the 4-hour. Yeah, move that up. It could well be going to have another go, come up and take these out if there's any orders up here, any liquidity up there, which there should be. Right. It's going to come up and take this out. We've got 3 there, 4 there. All right. And then you'll have to go on the daily where it goes higher. But this is what I believe is happening at the moment. I'll just drop back down to 30 minutes so we can get a good view of what's going on here. So there you go. Let's go and have another go. And what I'm going to do is I'm just going to draw a line on that 4-hour where those triple highs are, those equal highs here. You can see there now. What I'll do is I'll move that up to there, right, and then we can see where the price goes. Drop down to 30 again, and we'll see what happens. Okay, so now we know it's tested that. It's testing that area now for those equal highs. There's 4 of them there. So we'll just wait and see what happens. Okay, so I'm just going to make this a little bit bigger, and then we can concentrate on this now. Okay, big long week there, and it's pulling back now. It's getting ready. The news, non-farm payroll, it's just gone 130 there. Let's see what happens. And there we go. Our candle is now dropping, and this LPSY is the last point of supply. Okay, and it's going to come down now. We've got a nice long wick there now, and we'll see how this pans out. We'll just keep an eye on this and watch it as it comes down now. I'll just move that over to there. Now, then we can see that candle now on the 30-minute as it drops down. Now I'm in this trade, I'm still in drawdown, but I just wanted to show you what can happen on the news and how the banks work and how they work this out, how they can set this up. So we'll just keep an eye on this for the next few minutes and let's see what happens. I fully expect it, excuse me, I fully expect this to go down to, well past this. From BC to AR, this is the trading range. if it gets down here, right, again, it's another sign or another show of weakness in it. So if it comes down here, what will happen is this could well bounce like that. I'll just paint that on so you can see it. Get me a little paintbrush up. In this particular case, it could well do this and then go down. All right, sorry about that drawn there, but that's what could happen. So what's actually happening now? I can get rid of that. I need to get this off. I don't know. Come on, get off. Doesn't matter. Yeah, so what's actually happening now is any in this distribution phase now, any liquidity and stuff like that that's built up, it's actually starting to take it out, wicked all the way down to take it out. So I'm fully expecting this now. Like I've said, is that this is going to play out, come down here and go through this range. Let's get that off. Rectangle, that's what we want. All right, delete that. So yeah, we'll just see how this pans out. It's broke through this support area, and I do expect that to continue down. So that's what happens on a non-farm payroll type thing, and we'll just see how that plays out over the next half an hour or so. We're 3 minutes past now, and we can see here from when that candle opened, it's gone down 14 pips, which isn't that much. It's done 8. It's gone down to 14. I fully expect that to make its way down. All right, but we'll see how that pans out. So what I'll do is we'll just give it a few more minutes and we'll just watch that, and we'll see what happens. Now, this liquidity and this imbalance in that, it's got to come down to clear all this up eventually. I mean, this is a 30-minute time frame, so you know it is Friday, but I do think this is going to go into a downtrend now. Now, you may be wondering, why is Les talking about all this now and stuff like that? Because you know, what's this got to do with the harmonic scanner and stuff like this? Basically, this is how harmonic patterns are formed, and this is where they come from. This is why harmonic scanner is really important to use. It's like I've said before, it's a free tool. What you get with your subscription, you don't have to pay any extra for it. So it's really worth trying to understand it and master it. And what I can do is I can draw a harmonic pattern on here, and you'll see if you do use the scanner, you can see what's going on. That's not perfect. I'll need to check the measurements because it's based on Fibonacci. But it looks like this is a bearish butterfly pattern. As a harmonic scanner, is a harmonic pattern. You can place them different places if you want, make different patterns from them. I'll just delete that. High, low, high, low. I think that's about there. Where did that go to? That candle. 109,688. Can't quite see it on there. Well, that's going to go there. So you go to here, it's a butterfly. These measurements are quite important for them to be valid patterns as well, because they're based on Fibonacci. So yeah, we can see that now. So that's where the harmonic patterns come from, and that's why they're really important. And of course, the BYOB strategy works beautifully with this for entries. The only thing is, the other day when I called this out, I just called it out a little bit too early when the pattern was formed. And if I'd done this little bit of analysis earlier on, I probably wouldn't have got involved until now. But then again, we don't trade the news, do we? So, but I just wanted to show you what can happen, and I wanted to do that live as it happened, and that's why I put this video out, just to show you what can happen. So I will post this into the group. But what I want to do is, the reason why I didn't do it live as a Facebook live is because we would have just been on for hours while this plays out. So what I'm going to do is I'm going to stop recording this and come back in maybe I don't know, probably a couple hours time, and see where this is going. But that's and for those of you who do follow me, who do come onto my live sessions, I do appreciate you coming on there. It's great when we've got people on there. But I just wanted to show you why I go into detail, because I know people come on and sometimes you know, I'm not calling out trades and they're wondering why I'm not, and they're tuning in and they sit and listen to me for an hour and I don't give them a trade. And this is why sometimes I do make mistakes. It's easy to do when trades go against you, but I just want to be a better trader. I want to be better at this. If I'm doing live sessions with you, I want to show you some of the analysis that goes in behind this, right? Well, you don't really need to know all of this when you first start, but I do strongly recommend, right? In fact, not recommend, I'm telling you, right, to go into the academy, because that's what you pay your monthly fee for. Go into the academy and learn all you can on there. Watch all the videos, do all the little tests, do it, right? Because you will learn a great deal, and it'll stop you asking some of the basic questions. It's all in there, all about the write-off strategy isn't in there, but market geometry, structure of the market, harmonic patterns, Elliott waves, which is what all this is, right? Well, that's what all this is, how this has happened. It's all in there. You can learn all that, and the reason why you want to learn all that is the simple fact is that at some point, I'm not saying that, you know, I don't want it to ever happen, but at some point, you might not. I am Mastery Academy. Something might happen to it, and then when that goes, if you can't trade, you know, without getting signals and things like that, well, you know, you really do need to learn what's going on. So listen, where am I at? Right, Elliott wave. Excuse me. This is probably a 3 push pattern, but I'll do it as a 5 because that's what I've put on. That there's an Elliott wave, right? Second one is normally the longest one, so maybe I would move that back to there and put that to there and make that like that. That probably looks a bit better, like that. And that would be an Elliott wave. It's not a perfect one, but it's there, it's worked, it's an Elliott wave. It can be a little bit subjective, but how you know on an Elliott wave is from 1 to 2, 3 to 4 are normally the same, right? And when 4 comes on an Elliott wave, right, 0.4, right, should never be lower than 0.2. All right, 0.4 should never be lower than 0.2. So that's how you know to draw your Elliott waves. Now this is 5, but you can go on. You can go on if you want to do more on the Elliott wave. Sometimes you get 9, Sometimes you get 7, sometimes you get 9, sometimes you just get 3. Right, or sometimes you just get that 3 push pattern. Right, or sometimes you get 1, 2, 3, 4, 5, 6, 7, 8, 9, and so on. Right, but eventually you always get a market correction at the end of it, and this is what's happening here. All right. I do recommend you. In fact, I'm telling you, go into the academy, right, and learn everything you can in there. Spend your time wisely and learn this, because this is a skill for life. It will never leave you. You will be able to teach other people this as well, your family, your friends, to help them out. Right, oh, yeah, it's great having the harmonic patterns drawn for us and things like that, and getting the trade ideas using vibrato and things like that. It's absolutely fantastic. You know, that's what you pay for. But listen, I'm telling you, learn this, get it down, right? Or learn about Wyckoff, if you like, the banker strategy. I know it's advanced stuff, but try and get your head around it. I mean, I've only been looking at it for a couple of months now, but I do spend my time investing this, because I know that I need to learn this and I need to know what's going on. All right. So what I'm going to do is I'm going to shut up now, because I'm starting to waffle. But I will come back and give you an update. I may well just put it on the end of this video, just give you an update, and we'll just see where this goes over the next sort of hour or so. All right, guys, thanks for watching. I'm just going to stop the share and stop this recording, and I'll speak to you all later. All right, bye-bye.